Welcome to our deep dive into the 2026 crash, why the everything bubble will burst. Today we'll explore the synchronized bubbles inflating across stocks, housing, bonds, and technology. First, let's understand what an everything bubble means: a massive overvaluation across multiple asset classes at once. Historically, we've seen devastating crashes when bubbles burst: 1929's Great Depression, the 2000 dot-com crash, and the 2008 housing crisis. Stocks today trade at price-to-earnings ratios far above their long-term averages, surpassing levels set before the dot-com bust. Housing prices have soared nationally by over 40% in 5 years, driven by easy credit and limited supply. Bond markets, traditionally safe, now sport negative real yields, reflecting extreme investor desperation for returns. Tech valuations, inflated by speculative hype, echo the excesses of the late 1990s, creating a precarious foundation. Central banks have kept interest rates near zero for years, fueling cheap borrowing and speculative fever across all markets. But with inflation resurging and geopolitical tensions rising, central banks are forced to tighten monetary policy swiftly. This rapid shift makes all these interconnected bubbles vulnerable to a synchronized collapse like never before. Echoing 1929, 2000, and 2008, collapsing markets could trigger severe economic downturns and lost wealth for millions. Future projections suggest a significant stock market correction of up to 40% within 2 years if current trends hold. Housing markets might see a sharp price decline by 20 to 30%, reversing years of unchecked growth. Bond prices could plummet, pushing yields sharply higher and increasing borrowing costs dramatically. Tech startups reliant on speculative funding may face mass failures akin to the dot-com bust. So why the 2026 crash? Because these bubbles, inflated by decades of unique fiscal policies and market behavior, are reaching breaking point. Understanding these risks is crucial for investors and everyday people alike to prepare for possible economic turbulence ahead. Thanks for watching this fast-paced journey through the 2026 crash and the looming everything bubble burst.